Welcome to the YouTube coverage of the latest news from the biggest companies at this decade's Consumer Electronics Show in Las Vegas. In today's episode, we will be looking at Dish Network, Target, Arconic, Celsius Holdings, Norwegian Cruise Line Holdings, Zoom Video, Dick's Sporting Goods, Workday, Hims and Hers Health, and Advance Auto Parts, each of whom has recently made headlines either for their quarterly earnings, their service outages, or their upgrades or downgrades from research firms. Beginning with Dish Network, their shares fell almost 5%, following their recent multi-day service outage and double downgrade from a research firm. This has led to a 13.5% drop in share prices in the past year, with a staggering 61.8% loss during the past 12 months. Interestingly, Target has seen its shares surge 1.2%, based on its stellar fourth quarter earnings per share, which beat forecasts by Refinitiv. While their full-year earnings guidance did not meet expectations, the news was still seen as a sign of recovery for the company. Arconic shares have taken a 3.5% hit following a downgrade to sell from neutral by Goldman Sachs, likely due to uncertainties regarding demand in the European market. Meanwhile, Celsius Holdings was upgraded from neutral to outperform by Credit Suisse, leading to a 4.2% jump in share values. The successful distribution agreement with Pepsi is seen as a major factor, leading analysts to point toward long-term potential. Norwegian Cruise Line Holdings, however, saw their shares slump 5% following an unexpected loss greater than analysts had predicted. The cruise line had posted an adjusted 1.04 loss on 1.52 billion of revenue, drastically missing consensus estimates of a loss of 86 cents on 1.50 billion of revenue. But the story is much brighter for Zoom Video, as their shares have soared 6.9%, following a quarter that beat analysts' estimates on both the top and bottom lines. Although the firm's full-year revenue guidance was lower than expected, its earnings guidance still topped expectations. Dick's Sporting Goods saw their share prices dip 2.6% after being downgraded by Citi to neutral from buy. Citi insights suggest that the firm may experience near-term gross margin pressure as it moves forward. Workday, a human resources software company, has dropped 2.4% due to their revenue guidance for the first quarter, which came in lighter than what had been anticipated. But investors remain hopeful, as Workday still beat estimates for fourth quarter revenue and earnings, as investigated by Refinitiv. On the other hand, Hims and Hers Health saw their telehealth stock prices soar 9% due to their quarterly earnings results exceeding expectations. The firm had posted a loss of 5 cents per share on revenue of $167.2 million, while analysts had predicted a loss of 7 cents per share on revenue of $161.2 million. Last but not least, Advance Auto Parts saw its stocks jump 4.4% due to the fourth quarter earnings per share of $2.88, beating Street Accounts' estimate of $2.41. Revenue had also managed to exceed expectations. That concludes our examination of the key companies at this decade's CES. It's been a mixed bag of earnings and performance reports, but overall there's still much optimism in the market as companies look to rebound from the global pandemic. We look forward to seeing how these major players continue to shape the consumer technology industry in the years to come.